And we are looking at the Chapter 16 problem for managerial accounting. This is the mastery problem on job order costing. So we are going to work through this problem from start to finish. And we do have a student here in a work session, so you may hear her asking questions or clarifying things as we go through. But we're just going to start from the beginning and work through to the end. And I apologize for my phone ringing. So this is the Pearl of Great Price Company, and Maria Young is the sole stockholder. They produce knitted sweaters and sweater vests for sale. And they have 3 employees who are direct labor, 3 knitters. And then they have 1 administrative position. So that's an office manager is half of her salary. So that office manager part would be a period expense that goes right on the income statement. And then half of that person's job is being the knitting supervisor. And so that is part of the product cost. And that would be an indirect cost because we can't trace it to a specific job, a specific sweater or batch of sweaters. All wages are paid in cash at the end of each month. Each knitter has a knitting machine that is used about 2/3 of the knitter's time, the rest of the knitter's time being involved in hand knitting and piecing together the garments. The company also has a packaging machine used to wrap the garments in plastic for shipping, and the knitting supervisor is operating that machine. So that would be direct labor potentially there. The knitting machines were purchased at the beginning of this year. They cost $2,400. And we expect to use them for 10 years. So if we use straight line depreciation with no salvage value, we would want to spread that $2,400 over the 10 years. So that would be $240 per year of depreciation. The packaging machine was purchased on the same date, cost $4,800. So that would be $480 per year in depreciation. You can see we have a trial balance here prepared at the end of November with our ending balances for November. And then what we are reporting on as we get into the problem is what happened during December. So this is where we already are at the end of November. We'll come back to these opening balances. You can see we had $5,000 in materials, $5,404 in work in process, and that will be significant for us when we get toward the end of the problem. We have some information given here about our overhead accounts. Some of these, and we're going to go through each one of these, but some of these are going to be factory overhead, so it's related to making the product, and some might be the period expenses, selling, general, and administrative expenses. Maria has decided to use direct labor hours as the activity base, and so that's going to be the way that we allocate that factory overhead based on direct labor hours. The first thing we have to calculate then is the predetermined factory overhead rate. So in Blackboard, in the reference materials folder for Chapter 16, we have that 3-step process for the traditional approach to allocating overhead. The first step is in the budgeting period or the planning phase of the management cycle. We have to figure out how much do we expect to spend on overhead. And so that's what we're going to do next. I'm just going to get my annotate up here. So what do we have of these amounts that are given here? Which of these are our factory overhead? Well, there we go. We have the estimated depreciation on equipment of $1,200. And so that is going to be for the $240 each for the 3 knitting machines, plus the $480 that we had for that packaging machine. So that equipment is being used in the process of making the product. That's going to be part of our factory overhead. So we're going to use that. The next step here says estimated total for the office manager and knitting supervisor wages. Well, we already explained that half of that is a period expense, and the other half is a product expense, a product cost. It's indirect labor. Oops. So half of that, again, is the product cost or part of the product cost. And so I'm going to include that $18,000, half of that as part of the overhead. Next, we have estimated office utilities. Well, that's a period expense, not a product cost. So we're going to not include that. Then we have the factory rent and factory utilities. So those are both part of the product cost as well. So it's the best I can do for getting those to line up. Get the commas, the decimal place to line up. So let's see what we get here for a total. Grab my calculator. And go ahead and add those up, and that should be the amount that we have for the estimate of our factory overhead for this year. This step that we're doing right now would be completed before we even start production for the year. So this was their very first year of operations, we are told, and they put together their budget for the year, and that budget said we should expect to have $42,000 in factory overhead. So as we learned in chapter 15, our products consist of direct materials, direct labor, and overhead. This represents that overhead. So that's part of the first step in allocating overhead. We have to find our allocation rate. And so again, she decided to use direct labor hours, and right here we have our estimated number of direct labor hours for the year. That's 5,000. So we're going to be allocating our overhead based on the $42,000 we think we're going to spend and the 5,000 hours we expect to work. And that gives us an estimated overhead application or allocation rate of $8.40 per direct labor hour. And that is going to be the first blank here, the first question we had to answer. Predetermined factory overhead rate, we're going to apply it at $8.40 per hour. Any questions about where that piece comes from? Okay, so let's keep going then. What we're given next is first, this materials requisition is for the application or the movement of materials from the materials inventory into work in process. I think I'm going to try setting up the T accounts right now. Hopefully I'll have enough room here on the screen to do this. So over here on the right hand side, I'm going to put my T accounts. It'll maybe make it a little bit easier for us to have these as we go along. If I can fit everything in here. So squeeze a couple more in here, just little ones. Okay. And so we start with our materials inventory and our factory overhead and so we'll put the 3 inventory accounts across here and the right hand edge work in process and finished goods. So these are the 3 inventory accounts that we see on a manufacturing company's balance sheet. And then our final one here, cost of goods sold. So those are the ones that we're going to need as we work through the rest of this problem. And I'm going to scroll back up here to the trial balance. Remember, we had some activity already throughout the year from January to November. And so I'm just going to enter what we have already for our opening balances here. So the materials account had $5,000 already in there. Work in process already had 5,404. Our cost of goods sold for the stuff we had sold earlier in the year, January through November, $255,040. Our factory overhead had a $15 credit balance. And at this point, we had no finished goods. So now we have all of our opening balances in there. So let's see what happened. Our next thing that we need to enter is our job cost cards for the two jobs that were in process during this month, job 62 and job 83. Job 62 was already in process at the end of November, and that's this $5,404 that we already see in the work in process account. That includes all of the direct labor, excuse me, all of the direct materials for that job, plus part of the direct labor and overhead, the part that had already been done in November. So in December, we're going to finish up that job. We're not going to add any more direct materials. All the direct materials were added at the beginning of the job, but we are going to include some additional direct labor and overhead, apply some overhead. So I can put in the totals there for direct materials, but we're going to be looking for the direct labor and overhead that was assigned to this job. So right here, can't quite fit all of it on the screen, but right here we have the 3 time tickets. These are our 3 knitting direct labor workers. And you can see that their time for the month is divided between job 62 and job 83. Each one of them spent some time. So we have their hours worked for each job. And they also had wages paid that would be applied toward those jobs. So we're going to start with job 62, which we finished in the first half of the month. So we need to know how much more direct labor was added during the month. So I'm just going to be adding together from each job card how much time was spent and how many dollars were spent on direct labor. So 975 plus 1125 plus 900 is $3,000. So we added $3,000 more in direct labor to job 62 in the first half of December. Now remember, we determined that we were going to apply overhead based on direct labor hours, and we just calculated the rate to be $8.40 per direct labor hour. So now I need to know how many hours. We know that it cost us $3,000, but how many hours were worked? 65 were worked by our first employee, 75 by the second employee, and 60 by the third employee. So that's a total of 200 hours to finish up job 62. And we're going to apply overhead to each of those 200 hours. 200 hours times $8.40 per hour is $1,680 worth of overhead that we applied. Make sense so far?
So I'm sorry, because I was trying to do the direct labor between the 3. So then for the, what did you do to get the factory overhead? You used
Yep.
the
So we apply. Go ahead.
the hours they worked?
Yes. Yep.
You added all
So
3 of their hours together?
exactly. Yep. So remember up at the top, it said that Maria was going to use direct labor hours to apply overhead. And we calculated the rate to be $8.40 per direct labor hour. So then we need to know how many direct labor hours they were. And as you said, we're going to add up those 3 hours and then multiply by the $8.40 per hour. to get the total overhead of $16.80.
Thank you.
Yep, and then I'm just going to add the total direct labor, the total factory overhead, and the total cost for this job was $10,084. Because we finished up this job, we can also now calculate the unit cost, which means how much did each sweater cost us. And it tells us right here that this job 862 was for 100 sweaters. So we can just take that total and divide by 100 to get the unit cost of $100.84 per sweater. All right.
Okay, wait, you divided what by 100?
The total cost right here, the $10,084 is the total cost for that job.
Okay.
And that was for 100 sweaters. All right.
Thank you.
So now we can look at our second job, the job we worked on in the second half of the month, which was job 83. And so first we're going to look at this that I have highlighted. This is the materials requisition. On December 10th, we moved the skeins of yarn for this job. We moved into work in process. And so that was $3,500 worth of materials that we added to that job order cost card. So on December 10th, we added $3,500 worth of yarn to this job. No direct labor, no overhead yet. So the total on December 10th, we added $3,500 to the job. Now we're going to do the same thing for the direct labor and overhead for this job. When we go back to those three wage reports, time tickets, we can see the second line for each of these employees is for job 83. So we're going to do the same thing we did for job 62. Add up the $3 amounts and add those to the cost card. So go ahead and do that. The $3 amounts that were assigned or charged to job 83. And I got $4,500 for that. And then we need to add up the hours to allocate the overhead to each of those hours. And I got 300 hours. Boy, they make the numbers nice and round for us here, don't they? 300 hours at $8.40 per hour is $2,520 worth of overhead. And then we'll just need to put in our totals, adding across and adding down to put in the totals. Oops. Now, this job is not finished. This job is going to carry over to the next month, still in work in process. That's why we're not going to calculate a unit cost here, because we're not done with these sweater vests yet. Okay. So we did the same thing here that we did for job 62, but job 62 was finished and job 83 is not finished at the end of the month. So now that we understand what happened, what we're going to be doing in the next section is recording the journal entries. And I'm going to put the journal entries in, and I'm going to put them into our T accounts at the same time. That will help us when we get to the end of the exercise or the end of the problem. The first thing we're asked to do is journalize the movement of the materials into work in process. So we know that it was $3,500 worth of materials. We would move that out of the materials, so credit to the materials inventory, and into work in process. And as I said, I'm going to put these into our T accounts at the same time. So our materials moved out of materials and into work in process. So credit to materials, debit to work in process for that journal entry. Okay. Next, what we're asked to do is record the direct labor. And that we had already added up here. The direct labor in the first half of the month was $3,000. So we're going to add that $3,000 to work in process. And the reason that we are adding that is because we paid our workers, or we will pay them. So we set up the liability. We now owe our workers $3,000 for that labor. And in our journal entries, in our T accounts, we're not showing the wages payable. I could have set up a T account for that, but we don't need that for our purposes here. But the debit was for $3,000 to that work in process. There we go. Next thing is the allocation of our overhead. And we had calculated right here on job 62, $1,680 in factory overhead. So that moves out of the factory overhead and into work in process, $1,680. And we're going to be able to enter that in our T accounts as well. So $1,680 being added to work in process and being credited to the factory overhead. Exact thing that we just did in that journal entry. We repeated that in our T accounts so that we can keep a running balance here. Now we finished job 62. When we finish job 62, we move it out of work in process. It's not in process anymore, and it's going to move into finished goods. So the total cost of job 62, we have right here, my highlighted number, $10,084. So in our T accounts, we're going to move that out of work in process and into finished goods. And then we just need to put that into journal form here. We're moving it out of work in process into finished goods. Good so far?
Yes, but look, now my computer's about to die.
Uh-oh.
I'm about to grab my charger really quickly. Hopefully it doesn't shut down. Go ahead.
So what we have next is we actually sold part of the job. And so we're asked to record in our first journal entry here, the sale. So it says they were sold on account. We sold 75 of the sweaters for $125 each. So our sales, or our revenue, would be for the 75 sweaters at or times $125. Our revenue from that sale would be $9,375. And it was sold on account. So the debit side would be to accounts receivable. When we use a perpetual inventory system, and we're going to assume that that's what we're using here. This is a reminder, a refresher from chapter 6 back in financial accounting. When we use a perpetual inventory system, at the time we record the sale, we also need to record the cost of goods sold. And so that's what we're going to do in the second entry. Record the transfer of those costs out of finished goods and into cost of goods sold. So if you remember, up here on the job order cost card, we calculated the cost per sweater at $100.84. And we didn't sell all of the sweaters. We only sold 75 of them. So 75 sweaters times $100.84 is $7,563. Again, that's 75 sweaters that we sold times the unit cost that we calculated on the job order cost card. And I want to put those into my T accounts here as well. So we moved into cost of goods sold, $7,563. And we moved that out of finished goods. We no longer have those sweaters because we just sold them. The next entries are really a mirror of what we already did for job 62. We're now doing for job 83 at the end of the month. We're recording the direct labor, adding the direct labor to work in process, and then we're recording the factory overhead. Again, allocating that out of factory overhead and into work in process. So I need to go back up to the cost cards for job 83 to see the direct labor was 4,500 and the factory overhead was 2,520. So direct labor was 4,500 and the overhead was 2,520. And I'm going to put those into my T accounts also. So factory overhead was 2,520. And into work in process, we added the direct labor and that factory overhead. So that's why I needed such a big T account for work in process, because we've got two different jobs allocating direct materials, direct labor, and overhead for both of those jobs. Okay. And so those two entries look very much the same as what we had done here on December 15th for job 62, just different dollar amounts. Now this part, this entry might be the most challenging of everything we do in this problem because there's so much information here. So we're going to just take it one line at a time and think about how each one of these would be recorded. So let me get my annotate back up here. So the 1 month's depreciation on the equipment, we said at the top when we talked about factory overhead that depreciation is part of factory overhead. So I'm going to put stamps, a little star here. So that depreciation is a factory overhead. The rent and the factory utilities are also part of the factory overhead. Now, when we think about the payroll for our employees, that payroll includes the 3 knitters plus the supervisor/manager position. The payroll for the knitters, we already calculated that. And let me show you where we have that. So the payroll for the knitters, we have 3,000 here on December 15th that we put into wages payable on December 15th. And then on December 31st, we put another 4,500 into wages payable. So now that we are going to pay those employees, we will no longer owe that money. And so we need to zero out or clear out that wages payable. Now, the only reason I know that's going on the third line is because I've done this problem before. There's no magic way that I knew that. I just know it because I've seen it before. But that wages payable, now we're going to pay it. And so that's the other side of that will be the credit to cash. But we are told that B, C, and D, so the payroll, the rent, and the utilities, all of those are going to be paid in cash. So I don't yet know what that cash is going to be. The entry, let me find it here, to factory overhead, this is going to be the actual cost we're going to put into the factory overhead account. And I've got that positioned a little bit offline there. And so what we are going to include in that factory overhead are the three items that I have starred. The depreciation, it's $1,200 a year, so that would be $100 for the month, plus the rent of $1,500 and the utilities of $1,275. If you recall, the depreciation number was given to us up farther in the exercise. So we have $100 for depreciation for the month, $1,500 for the rent, and $1,275 for the utilities. The other part of that factory overhead is the half of the salary or the wages for that knitting supervisor slash office manager. The office manager part is a period expense that we're going to record as wages expense. The supervisor part, the knitting supervisor, is part of the overhead. And we again discussed that at the very beginning of the problem. So of that, those wages, if I just scroll back up here to remind myself too of what that number was. Let's see, his or her wages, that supervisory position, is $36,000 for the year. So that's $3,000 for the month, right? 36,000 divided by 12. That's $3,000 for the month. And if I get all the way back down here, here we go. So for that payroll, it's $3,000 for the month that we're going to pay. But of that $3,000, $1,500 is the manager part, the office manager, and so that's a period expense. And the other $1,500 is the factory, that didn't make it very small, is the factory overhead. I'm just going to abbreviate it like that. Okay, so do you see where that came from? $36,000 for the year, that's $3,000 for the month. Of that $3,000, half the time is a period expense for managing the office, and the other part is knitting supervisor, and that's a factory overhead indirect labor. So in our entry here, we're going to record the period expense as wages expense, and the other $1,500 becomes part of factory overhead. We already have the depreciation, the rent, and the utilities. Now we're going to add to that the supervisory, the indirect labor. And so that's a total of $43.75. I'm going to say that one more time. That $43.75 includes 1 month depreciation of $100, the $1,500 for the knitting supervisor, $1,500 for the month's rent, and $1,275 for the month's utilities. Now we can figure out how much we paid out in cash. It's the payroll for all of our employees. That's the $7,500 for the 3 direct labor, plus $3,000 for the office manager slash knitting supervisor. We're also told that the rent of $1,500 was paid in cash, and the utilities. And so that total is $13,275. Okay. Now we can figure out how much is left. And that's $100 needed to make that entry balance. So that $100 is the depreciation. Remember, 1 month's depreciation, the expense part of that, or the cost part, went into factory overhead. That was the debit. Any depreciation entry, the credit side, is to accumulated depreciation on that equipment. So, as I said, a lot going on in that entry. That's probably the most complicated because there's so many pieces there that you kind of have to figure out. Any questions about what's there?
No, well, I have a question about job 62 for the direct
Okay.
labor.
Yep.
The total cost, I put 3,000, but it says it's wrong. Did I put the wrong number in there?
Yep, because you needed to add
Oh,
the
the
$300
300.
from the, yep,
Okay. Thank
Yep.
you.
yep, good question. Okay, then let me just put what we have here in this journal entry. Let me put that into our T accounts if I can get that so we can see all of them. So I'm going to put that journal entry into our T accounts. So we have a debit. This is the actual factory overhead of $43.75. The wages expense, we don't have that T account. Wages payable, we don't have that T account, or cash or accumulated depreciation. So the only part I needed for my entries here was for the factory overhead. I'm not suggesting we don't record those other things. I'm just saying we don't need it for the purpose of this problem. But the next thing we're asked to do then, at the bottom of the screen right now, it says to dispose of the balance in the factory overhead account. So in order to dispose of that balance, I need to figure out what the balance is. So let me go ahead and calculate that. Add up the debits, add up the credits, subtract the smaller number from the larger number, just balancing that T account. And what I found was a debit balance of $160. Okay, the debits were more in total than the credits. So we end up with a debit balance, and that it's that $160 that we need to dispose of. As we discussed in chapter 16, if it's not a material amount, if it's less than 5% of the total, we dispose of that by dispose of, we mean zeroing out that factory overhead. In order to zero out that factory overhead account, we need to credit factory overhead for 160, and that will bring that account down to a zero balance. Since it's not a material amount, since it's less than 5% of the total, we simply move it to cost of goods sold. And so if I were to put this entry into our T accounts, it would be a debit to factory overhead and a, excuse me, I said that backward. It would be a credit to factory overhead and a debit to cost of goods sold. Now that factory overhead account has a zero balance. And we move on to our final question. I already know the factory overhead account has a zero balance. It has to have a zero balance. At the end of the year, we have to have fully allocated that overhead. For the other questions, though, we have our T accounts right here on the screen, and we just need to find their balances. So for the materials inventory, we have 5,000 minus 3,500. The balance in materials would be 1,500. For work in process, we need to add up all of those debits. And then subtract the one credit for that job that we sold. And I got $10,520. I'm going to show you something. If we go up to the job order cost card for job 83, there's that number, $10,520. It better match, right? What we have in work in process is only job 83. So what's in our work in process, the control or master account, better be what we have in there for job 83. So I feel pretty good about that, the numbers match. They need to. For finished goods, we had $10,084 in there, but we sold 75 of those sweaters. So what we have left is just the value of those other 25 sweaters we have not yet sold. And finally, our cost of goods sold, we have only debits, so I just need to add those three numbers together. Oops. 262, 763. And at long last, we have finished the problem. Before I stop recording, do you have any questions about what we did up to that point?
No,
Okay, so let me stop
but
the
thank
record.
you.
Yep.